Hey, how's it going, everyone? My name is Derek Afasi. I'm the owner of Afasi Financial Group. Today's topic, I want to discuss with you annuities for retirement and how to find out or figure out the best retirement annuities for your specific situation. Now, annuities could be used for a couple of different situations. Specifically for retirement, that's where it's going to correlate best. If you're within, 15, 10, 5 years out, even 30 days, 6 months out of retirement, you could really utilize an annuity for that to accomplish that specific goal. Now, the first type of annuities that came out were just very generic annuities. They're known as like single premium immediate annuities or immediate annuities. And what happened was an individual would take a portion of their retirement assets. Let's say if they have $1 million, they would take a portion of it, maybe 500,000, purchase an annuity contract, and through an insurance company. Insurance company is the only one that could actually offer annuities. That insurance company would now have that money, and then they would guarantee that individual an income stream for the rest of their life. So in this situation, let's say this individual was 70 years old, and they said, I want to make sure that I can't outlive my money. And the insurance company said, okay, based upon our rates and based upon what's going to be most favorable for you, we could give you $60,000 per year out of this $500,000. So we understand if this individual was to pass away after 2 years, well, he would have been paid $60,000 would have been $120,000, and the insurance company would have won. The insurance company would be winning on that deal, and because they would be able to net a profit of $380,000. Or if the individual keeps living, let's say they live past 10 years, well, or right at 10 years, they would have been paid $60,000 for 10 years, which is $600,000, and it would have only cost them $500,000 to do so. So then the individual would have won. Now, since that point in time, annuities had very bad reputations, and it was because of the fact that insurance companies would always win because they understand exactly the statistics that an individual that's age 70, that's either a male, female, how long that person's going to be able to live, or 65, or whatever that age was. So you still have those types of annuities out there, but they're not necessarily that powerful anymore because of the other variations of annuities that came out. So that explains how an actual annuity contract works, the general shell of an annuity contract specifically for retirement. And that process, when they turn on their lifetime income stream, is known as an annuitization process. When you annuitize your contract, you're essentially surrendering control to the company. Yes, it can be beneficial for you, but most likely the company's going to, if you have 100 people that are doing this, the company's going to be winning off of 90 of those individuals. And that's how the insurance companies are able to stay in business, is off of those law of large numbers and the mortality tables, making sure that they're always winning out on the deal. Also, for this individual that put $500,000 in there, if they would have passed away after a couple of years, well, now their beneficiaries don't receive any money. Yes, they're receiving an income when the guy's still living, but God forbid something happens, they come out with some sort of ailment, some cancer, whatever it is, they pass away. Now the insurance company is basically winning because that individual made the decision to purchase that contract when he felt like he was going to live for a long time. So I hope that makes sense. And that's not the recommendations that I typically make. Whenever someone calls in, they say, it's only for that specific client that says, I just want to have as much income as possible, but I don't really care about any beneficiaries, and just give me a max payout. Maybe an immediate annuity might be right for that person. Now, fixed annuities came out because with retirement income planning, it used to be very simple to utilize. When you had interest rates in double-digit figures, it was so simple to utilize like a bank CD for retirement. What a person would be able to do in that same scenario of $500,000, they'd be able to purchase a 5-year bank CD. Maybe it's paying 10%. So they understand they're getting paid the interest year by year by year, which is $50,000, year by year by year. After those 5 years are done, then they'd be able to walk away with that $500,000 again. Well, annuity companies said, okay, well, we can't offer bank CDs, but banks cannot offer annuity contracts. So let's create a type of annuity, a type of product that mimics that bank CD type concept. And that's where the fixed annuity came out. Okay? So when the fixed annuities came out, it was very similar. It said, okay, listen, you have $500,000. Instead of paying you only 10% rate of return, we're going to be able to pay you a 12% rate of return. And both of these have legal reserve structures, making sure that they're very safe contracts. So they wanted to make sure that the safety was there. Just like how people feel safe with a bank CD, people want to feel safe with a fixed annuity, and that's why they go into it. So instead of getting paid, $500,000, $50,000 per year through a bank CD, they could go to the insurance company that offers a fixed annuity and get paid $60,000 per year. Interest year by year by year. After the 5 years are done, then they could walk away with their $500,000 again and then purchase a new 5-year bank CD or 5-year fixed annuity. So it used to be so simple to do that retirement income planning process, or even just for that safe, consistent growth. If somebody doesn't even want to take that income and they just want that money to keep accumulating, then a fixed annuity would work perfectly for that specific situation. Well, after that happened, we understand that interest rates hit all-time lows. So now you'd be lucky if you could find a bank CD, a 5-year bank CD paying 1%, or a 5-year fixed annuity that's paying you, 2.5%. It's just because interest rates, it's the low interest rate environment, the Treasury, U.S. Treasury bond environment that is keeping interest rates so low that is really hindering that portion of how to retire successfully. So now people are saying, okay, if I have the immediate annuity option that doesn't give anything to my beneficiaries, I have the fixed annuity option that is going to give something to my beneficiaries, but I'm not going to receive any sort of, return, or I'm not really going to be able to leverage that dollar amount, for retirement income because the interest rate is so low. What is my other alternative? And that's where some of the index annuities and some of the hybrid annuities, which is just an index annuity with an income rider, came into play. So annuities for retirement, you have to understand that you could accomplish specific goals, one goal being safe, consistent growth. If you want to go and you want to say, okay, listen, I want to have my bucket of money, if I have $500,000, and I don't care about taking income from this account, but I just want to have safe, consistent growth on that, you could essentially roll it over into an index type annuity contract. Depending upon where it's coming from, if it's coming from like an old 401k or old IRA, you could roll it over to an IRA annuity contract. And kind of think of that bucket now, instead of being susceptible to downward market loss and fees through mutual fund related fees, what a fixed index annuity does is it doesn't have any mutual fund related fees. You would have a specific cap regarding if the market goes up, you'll be capped on how much gains you could receive, but you'd also have a floor of 0%, meaning if the market crash, you're going to gain 0%, 0%. So it gives that more peace of mind in retirement that says, when the markets go up, I want to receive gains into my account. When the markets go down, I want to have that peace of mind that I'm not going to receive any losses to my account. And there's a lot of fixed index annuities that don't have any fees attached to it at all. Sometimes, depending upon how attractive they are, they might have longer durations of time. Like a 6-year fixed index annuity might have a smaller cap rate than a 10-year fixed index annuity because the company is ultimately able to hold onto your dollars with restrictions, be able to restrict how much money you're able to pull from that account for a longer duration of time. So that's how they're able to give you this type of offer and give you that specific, contractual guarantee on your money. The hybrid annuities are very good, especially for retirement, because I truly feel, and I've seen them do wonderful things, but I truly feel that they give you the best of all worlds scenario. They give that individual that wants to have safe, consistent growth when he's not looking to pull his money, but then when he understands exactly what age he wants to execute for lifetime income, he could do that through the form of an income rider. Now, in this scenario with the $500,000, let's say that person put in a hybrid annuity and the person wants to execute that hybrid annuity through the income rider instantly. And let's say instead of getting paid $60,000 through an immediate annuity, maybe they'll get paid $55,000. But what happens is when they get paid that $55,000, their account is still going to grow with whenever the market goes up and gain 0% whenever the market goes down. And every time that he takes a distribution is going to reduce that account value proportionately. But when that person passes away, all that money will now be able to go to their beneficiaries. So they're not just surrendering it to the insurance company. Depending upon what your situation is, that's the most important thing, is what your situation is, what your goal is, how old you are, what your state, different things, how much money you're looking to basically place within these things. These are all the variations you have to consider if you're interested in an annuity contract for retirement. One of the things that we do is we are available 24/7. It's 24 hours a day, 7 days a week, through our 1-800 number, 1-800-566-1002. If you're interested in, possibly going with an annuity contract, or you already have an existing annuity contract and you're thinking about, is this the best route for me? Or, is company XYZ going to be the best for me? Or I heard an advisor talking at a seminar. You want to make sure that you are looking at all the different results. And this is one of the reasons why we have a lot of national recognition. When a person calls into our office, you say, if you're calling regarding an annuity, we say, okay, listen, you're going to be dealing with an annuity specialist. That annuity specialist is going to ask you a slew of questions. What are your goals? What are you currently doing to accomplish those goals? If you could accomplish those goals without using an annuity contract, then there's no reason in the world to get into an annuity. But if there's certain gaps and there's certain contracts out there that an annuity could really work for your benefit, we're going to start giving you recommendations. And we're going to help you understand where those gaps are and whether or not you could leverage a financial contract such as an annuity or another safe money contract to make sure that you're accomplishing those goals successfully. On average, and one of the name of our process is known as the Retire Sharp Planning System. And on average, when we're going through our due diligence and we're looking, depending upon the person's age, depending upon when they want to retire, their growth goals, whatever that is, we put it through the ringer. We go through this Retire Sharp Planning System process. And on average, we go over 1,200 different scenarios per client that calls in. What that does is it makes sure that we're going through every contract in that specific state, every contract specific to that age, and also all these proprietary strategies that we deal with in-house that no other agency has access to, and then we give our recommendations. After those 1,200 scenarios, we might have 3 recommendations. Say, okay, recommendation A, recommendation B, recommendation C. Recommendation A, these are all the pros and cons. B, these are all the pros and cons. C, these are all the pros and cons. What do you feel? And if they're still not comfortable, if you're still not comfortable with it, there's no use going into something that you're uncomfortable with. You want to make sure that you're confident, you want to make sure that you're educated properly, and you're doing it on a very safe, methodical process. And that's something that we try to provide to each and every client. We are A+ rated on the Better Business Bureau. We've always had very good reviews. We've never had any complaints. And it's because of our Retire Sharp planning system and the 24 hours customer service, 24/7 customer service. Feel free to subscribe to our YouTube channel. It's Retire Sharp, so you have access to the most updated videos. We've been getting a lot of questions in, and every time we're receiving questions, we've been sending out videos on a weekly basis. So every week, I'm going to try to get over some content to you guys so that you could educate yourself a little bit further. But definitely, feel free to give us a call. You might be dealing with myself. You might be dealing with another advisor. And I want to thank you very much for watching this video, and hopefully you found some value in this, and this will help further your decision on whether or not annuity might be right for your specific retirement goals. All right, guys, thank you so much.